Hi you guys, welcome back to Progressive Sistas Magic. Today is lesson 8 part 3 where we'll be going over MACD, which stands for Moving Average Convergence Divergence. A very wordy phrase, okay, and a very wordy indicator, and we're going to jump into that shortly. But this one is just for MACD and pairing it with RSI, okay? So I've already went over RSI, EMA, SMA, so if you need any clarification on those topics, go ahead and refer back to lesson 8 part 1 and part 2, because now we're moving on to part 3. Okay, so we're going to go ahead and hop straight into it, and we're going to go over the definition of what MACD is exactly. What is MACD? MACD is a trend following momentum indicator that shows the relationship between two moving averages. The MACD line is equal to a 12-day EMA or a 26-day EMA. Single line equals a 9-day EMA of MACD line. Histogram is bars showing the difference between MACD line and signal line. A bullish indication appears when the MACD line moves above either the signal line or the zero line. This movement implies the momentum is shifting toward the upside. At the same time, the histogram reduces its negative bars, highlighting that bearish forces are losing strength. Traders also pay attention to bullish divergences, regular or hidden, as these can act as confirmation of growing upward momentum or continuation for the existing trend. So let's break this down one by one. So we'll first go over the signal line. And the signal line, essentially what that's going to be is going to be giving you a signal on where the market is going. So the line itself necessarily isn't the signal, but the things that are interacting with the line are the signal. So the MACD line interacting with the signal line is going to give you a signal essentially of where the market is going. So what I mean by that is when the MACD line comes up from below the signal line and it surpasses the signal line, that essentially means that it's going to be signaling a bullish market. Okay, so it's going up, it started from the bottom and it went up and it surpassed the signal line. Now when it's already above the signal line and it's going down below the signal line, that's signaling that it's going to be a bearish market. So the interaction between the MACD line and the signal line is very crucial to understanding this indicator. Now I do want to add, just because the MACD line goes above the signal line or goes below the signal line doesn't essentially mean that it's automatically a bearish or a bullish market. It's just a signal. It's signaling momentum, okay? And when it comes to momentum, you have to be careful because that momentum can change sporadically. It can ride a long wave or it can have very sharp moves and be up here and then drop right down there, okay? So momentum is actually tracking how long that trend is going. Because I made the same mistake when I first started trading with indicators. Just because the indicator MACD line is going from below to above the signal line doesn't mean it's automatically bullish, okay? That does not mean it's automatically bullish. It's a bullish signal, but you have to wait for confirmation, obviously, with any indicator that I go over. So speaking about momentum, this MACD indicator goes really good with the RSI oscillator. So if you remember from my past lesson, RSI basically tracks the momentum of a product. So the momentum of a stock or crypto or whatever it is that we're going to be trading, okay? So it's going to be telling you, is it going to be overbought or is it going to be oversold? And also remember, the correlation between the RSI and being overbought and oversold is essentially when it's overbought, that means that a lot of investors or retailers might slow down on the momentum with that price. So they may slow down on buying that because it is considered overbought and the market is essentially expected to turn around and change, okay? Same thing with being oversold. If it's being sold off too much, retailers will calm down, essentially measuring the speed and the strength of these price movements that happen within the charts all day. So RSI and MACD go really great when paired together because they're both essentially tracking the momentum. Now they have different ways of tracking that momentum, which is giving you different signals for the market. But at the end of the day, they are both tracking the momentum of those prices and the strength of the momentum of those prices. And in the PDF file that we have on our school app, we do say exactly why the RSI and MACD pair so well together. So I'll go over that now. The MACD pairs well with the RSI indicator because they complement each other. The MACD is primarily focused on momentum shifts in trend direction using moving averages, while the RSI evaluates overbought and oversold conditions, helping to anticipate reversals. Relying on just one indicator can sometimes create false signals. However, when you combine both, they provide stronger confirmation, filter out unnecessary noise, and improve trading decisions. For instance, if the RSI shows a bullish divergence and the MACD confirms it with the crossover, the setup becomes much more reliable for taking a long position. You guys, I am in total favor of using multiple indicators and oscillators when marking up your charts. Now, I will say if you use too many of these indicators, it's going to be like a lot of mumbo jumbo and you might get lost in the sauce, okay? Now, if you use too few, you'll have false signals, okay? So it's best to go ahead and pair them together. So if one indicator is telling you that it's leaning more towards a bullish market, you can use another indicator to literally confirm that same exact thing. And then you should feel more comfortable placing a trade. But I don't recommend that you should just go off of one indicator. And I also don't recommend that you just use all the indicators, okay? Because all the indicators, if I'm being completely honest, can point to one way of it bullish market and your trade still not go the way that you want it to. Okay, so that's also why we don't solely focus on using indicators when we're placing a trade. We're using the market dynamics as a whole, using our knowledge that we learned from the charts, which is what I taught y'all early on, our trading psychology, which is what I taught you guys also early on, and then you're using all the knowledge that you know about crypto. That's why trading crypto is so fun for me, because when you really study crypto and you study which coins you're going to be trading, you become necessarily like an expert at that coin. So you memorize its price movements. You know which reversals are coming, how it shifts. You notice at what times of the year it's going to be up, what times of the year it's going to be down. Okay, it's a cycle of continuous cycle over and over again. And so that's why having the knowledge on whatever crypto coin you're going to be trading, having indicators, understanding the market dynamics, and also having great trading psychology is what's all going to really benefit you as a trader, and is all the things that you need before placing a trade. So also one thing that I want to go over in this video is what exactly a bullish and a bearish market is going to be looking like. So when you have these indicators, you also need to understand what a bearish and what a bullish market is looking like. So let's start off with bullish. Bullish is essentially going to be higher highs and higher lows. So that essentially means that the price is just climbing up, okay? So in bullish market, the price is not going to just go straight up. It is going to be a little bit of this going on. So that means that it's going to have a higher high. And then when it comes down low, that low is going to be higher than the previous low that it just had. Okay, so that is going to be signaling a bullish market. Now, for a bearish market, it goes the same way. It's not just a straight line. It's going to be a little bit of zigzags to it, but it's going towards the downward side. So that means there are going to be lower highs and lower lows. When it reaches a high, a new high, it's lower than the last high. So when it reaches a new low, it's lower than the last low. And that is telling you that it's a bearish market. So these candlesticks, the candlestick anatomy is very important for understanding these indicators, especially when it comes to RSI and putting it together with MACD. Okay, you guys? And you might be like, oh my gosh, how am I supposed to plot out the RSI, the MACD, and all these things? All you have to do, guys, is go to TradingView or go to your brokerage and open up a chart, and literally you just press the MACD or RSI and it'll plot it out on your chart for you. So there's no need for you to do any math. There's no need for you to like mark up any candlesticks and the highs and lows of the candlesticks. There's none of that needs to go on, just to plot these indicators. Now, after you plot the indicators, yes, mark up those candlesticks, the higher highs, the higher lows, mark up that support level, mark up that resistance level. All of those things are very much so needed when you're trading. But I do want to let you guys know that on TradingView, you can definitely do this very easily, and on your brokerages, you can as well. Now, I will admit on TradingView, if you're using the free version, which is very good, you can only use 2. So that goes to say, if you only want to use 2, the 2 that you can plot on there would be best RSI and MACD, because they work so well together. So that's why I did this video, because I want you guys to know that if you are going to be using TradingView, you don't want to pay for the subscription plan and things like that. You can go ahead and use the RSI and MACD as your indicators and just go based off of that moving forward. But if you want to be able to use any indicator that you want, because maybe RSI and MACD doesn't make sense to you, maybe you like EMA, maybe you like SMA, you can go ahead and subscribe to TradingView to get a better, package deal, essentially. But we don't have to do all that. We really don't have to do that. I actually don't do all that. So RSI and MACD, they work well for me, a great pair, paired with also the knowledge that I have, and then also everything I know about crypto. And I trade Ethereum. So one thing that I do with Ethereum is I'm going to be looking up everything on the market all the time. I'm going to be indulging in all the information that Ethereum has to offer me so that I can fully understand the market, so I can fully understand the trades and really know when these indicators are giving me a false signal or not. Because indicators will definitely give you a false signal if you don't know your stuff. So if you don't know your stuff, you will definitely get lost in the sauce, like I said before, with these indicators. And I don't want that to happen to you guys. Now that is going to be it for this video. We went over the MACD, which stands for the moving average convergence divergence. Yes, you had that correct. Give yourselves a round of applause. All right, and next we're going to be going over Bollinger Bands, okay? That is another indicator. Really kind of weird, you know, how this works, but it does work. So I suggest that you go ahead and move on to our next video for part 4 of this lesson. This is the longest lesson we've done, but I wanted to break it down again into different parts so that you guys can fully understand each one. So if you have a clear understanding of RSI, MACD, and things like that, you don't have to go watch these videos. You can just go ahead and solely watch whatever video that you need the most clarity on. Okay, you guys? So after we go over the Bollinger Bands, that will close out this lesson 8 and we'll move on to lesson 9, which means that we'll have one more lesson till lesson 10 and then we're done. So go ahead and swipe to the next video where I'll be yapping about the Bollinger Bands and promise you it's not going to last that long. So just go ahead and get your education. Go ahead and get it in while you can. Bye, you guys.